The truth about assets and liabilities. Welcome to Money in Mind, a fun and friendly channel that will bring you high-quality financial advice towards happiness and success. Many of us are probably wondering, what is an asset and a liability? In today's video, we will be giving you an insight into the truth about assets and liabilities. Assets are resources that you own. Assets can put money in your pocket and can provide an economic benefit in the future. Meanwhile, liabilities are the total opposite. Liabilities are obligations you have. They are the things that take money out of your pocket. So, you may be asking, what could be considered an asset and a liability? Let's start with a house. Do you think a house is an asset? Sure, it looks like it. You own this and it costs a lot. However, it will only be considered an asset once you plan to sell it. It can become a liability if you don't plan to make money out of your house. Why? Well, you will be spending money on mortgage and house maintenance. It will become an asset if you sell the home at a higher price. To be called an asset, one needs to be a source of income. How about your car? Is it an asset or a liability? Many believe that a vehicle is an asset, but it is not. Why? You may ask once again. A car cannot be considered an asset because over time, it depreciates in value. You can sell your car at a higher price after 6 or 12 months. Your car is losing value every day that you are driving it. Plus, maintaining a car can cost you a lot. Sounds more like a liability to me. So the question now, what is the best example of an asset? Before we find out, don't forget to like this content and hit the subscribe button to get instant updates from Money in Mind. Alright, now back to the truth about assets and liabilities. Number 1. Stocks. A stock is a type of investment in a company or a business. These companies issue stock shares to raise money to finance their operations, and investors buy those shares to generate a return on their investment. Stocks have huge potential, especially for those who know how to manage them. If you don't know anything about stocks, you can always learn about them. But if you don't understand how it works and still dove in, you will have a tough time dealing with them. Let's say you bought a stock. This means that you purchased a percentage of a company. With this, you are now an associate of their business. Do you have a say in the company if you bought a stock? If you own enough shares or buy a bigger stock, you may have a voice in the company's decision making. So, how do you earn from stocks? The most common way to make a profit from stocks is capital gain. For example, you bought a stock. You should wait for its price to go up, and that's the time you sell it. But the question is, do all stocks go up? Nope. There is fluctuation most of the time depending on the demand and supply of the market. This is where it gets crucial. Before investing in shares, you should be knowledgeable enough to know if the company stocks have the potential to go up. If the prices don't go up, you will lose your money. Investing in the stock market is one of the world's best ways to generate wealth. But remember, while you can generate a tremendous amount of money with stocks, it comes with significant risk. Another way to make a profit from stocks is with dividends. Dividends, issued annually, quarterly, or twice a year, are the equivalent of your shares or ownership in a company. If, in your prediction, a stock will be in demand in the future, it's a good idea to buy it as its value will rise. If this happens, you can sell it for a higher price. But how do we acquire stocks? You can open an investing account through your bank or an online stockbroker. You can also buy directly from the company you are eyeing, but it comes with great capital. What's another excellent example of an asset? Number 2. Real estate. As I've mentioned earlier, buying a home can be an asset if you intend to sell it. Let's say you would like to invest in a property and plan to resell or rent it. It's an asset indeed in this situation. In fact, many real estate investors purchase underpriced properties that need a couple of fixing, like repainting or refurbishing. Once you've fixed the property's issues, you can put it up on sale for a higher price. You can even have it up for rent to generate income for the next months or years. Acquiring an asset such as a stock in a real estate needs much research. You cannot just say yes to an investment. With enough knowledge, you'll earn money in no time. Speaking of knowledge, that's our number 3. Knowledge. One of the best assets that a person can possess is knowledge. It doesn't always have to be your own. Let's say you have a team of skilled writers, graphic designers, and video editors. Their talents benefit your company so much that your brand's demand became so high, and you generate a lot of income. Thanks to your super awesome team. Their knowledge is an asset to your business. But don't underestimate your knowledge, which is one of the most important things you own. Imagine acquiring a skill in business and sales. And because of this, you were able to build a high-earning company. Sounds like an asset, right? Right, indeed. In conclusion, assets are things that make money for you, and you should definitely consider investing. Just be wise enough to know how to make them grow. And that was the truth about assets and liabilities. Comment your thoughts, give us a thumbs up, and don't forget to subscribe to Money in Mind and join us on this exciting journey. Take care, and we'll see you in the next video.